Welcome to the channel, guys. My name is Jess. So Bitcoin has recently faked out of a 2-week-long downtrend, leading to the subsequent loss of two crucial supports on the daily timeframes in the failed rally. We're going to dive into the charts today to break down the recent price action and analyze what that could mean for the future, including a possible breakdown scenario based on a 2023 fractal and new bullish validations. As always, before we get into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram channel, and if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, so diving into the charts here, we can see the price action lately has been pretty choppy, which is kind of normal moving into the December and New Year period. We generally see a really steep drop in volume, which leads to, I guess, less orders and more volatility. But what we can see here from the recent price action is that Bitcoin's been traveling in a 2-week-long downtrend, right? And prior to this sort of fake out scenario that's happened over here, this 4-hour trend line, as well as the RSI trend line here as well, were very crucial sort of bullish indications and validations that should have suggested a move above $95,000, particularly with that momentum shift, and then a move up to retest the next high here at 99K, the break of which leading to a extended bullish move to retest the all-time high and range high resistance at $108,000. Now, obviously, that is not what we saw, right? We had a fake out here, which essentially means that we've invalidated the structure itself. And it kind of makes the charts a little bit more murky now, because what are we looking for then on this chart to suggest that bullish shift? So we're going to dive into the charts today to talk about the consequences of that failed rally and the breakdown of a couple of supports on the daily time frame, and a possible breakdown scenario in a 2023 fractal that sort of maps out what's going to happen in the loss of $91,000, and then move on to some new bullish validations. Before we get into the rest of the video, guys, let's hear a quick word from our sponsor, BTC. We can get 15% off all of your trading fees and up to $5,500 in sign-up rewards when you create your free account using the link down in my description box. BTC is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So heading over to the daily chart to talk about the consequences of that failed rally, we can see that the high time frame charts really aren't looking all that great, guys, right? So we can see that, not only did we in the last 3 days break below the leading span A here on the Ichimoku cloud, or the top of the Ichimoku cloud, but we also went on to, in that recent failed rally, retest 95K, the leading span A, as a level of resistance, as well as the blue squiggly line also on the Ichimoku indicator, the conversion line, and the rally rejecting off those points failed to sustain and therefore, re-entered back into the cloud. So what we've seen here is a breakdown and then a validation of that breakdown, particularly of that leading span A. So that spells a little bit of a red flag for Bitcoin, and it obviously tells us then that the prior analysis, where in falling into this cloud here, we can expect a high probability of seeing an extended bearish move to potentially go as far as retesting the base, or the leading span B, being this red squiggly line at the bottom of that Ichimoku cloud down here at $85,000. Now, of course, Ichimoku isn't the only indicator that exists, and it isn't the only important thing that's valid on a chart. We still have other horizontal levels of support, being $91,000. This is the most crucial level that we're looking at right now in terms of signaling that extended breakdown. On the flip side, looking for bullish validations, then the same horizontal levels are still very much relevant as well. So that being $95,000 as that short time frame level of resistance, a flip of which to support should then facilitate a move to $99,000, in which case we also break out of the Ichimoku cloud and back above our 50 EMA, all the sort of high time frame validations we have here on the daily chart. And then, of course, a higher time frame shift in this 12-hour or daily chart downtrend in the RSI should then signal a move past 102k and back up to retest that all-time high level of resistance. So now that we sort of identified our key horizontal levels, our bullish triggers, and what we're looking for, it's time to talk a little bit about probabilities. So we know that from this daily time frame, while we're within this Ichimoku cloud and below our daily chart and 12-hour time frame RSI downtrend, the overall probability of seeing that bullish shift up to $108,000 is quite low, right? Until we see those things broken and those validations, the charts are still looking relatively bearish. But another piece of analysis that really supports that notion is a 2024 fractal. So what we're seeing here is very, very similar to what we saw in this fractal in 2024 or at the beginning of 2024, right? So we had this sort of horizontal chop zone, which is essentially the equivalent of what we are seeing here, ranging from our 91k to 99k, this one being $40,000 to $45,000, slightly different of course, but same sort of pattern structure. We had a failed rally and a breakout over here with massive bearish divergence, right, leading to a breakdown of that horizontal level here at $45,000, and then a bearish continuation to chop within this smaller time frame sort of horizontal zone, which is the same as what Bitcoin is doing right now in this current year. Now, if we take a look at what happened in 2024, Bitcoin went on to retest the 50-day moving average multiple times. Upon breaking below that, and as well as the Ichimoku cloud, we entered the cloud and moved on to retest the leading span B, the base of that cloud. Now, if we take a look at what Bitcoin's doing here, once again, we're retesting. We've seen two retests of the 50 EMA. We've seen a breakdown and then a slight resurgence back above it, which is what happened right here. And then in finally breaking back into that sort of, or back below, sorry, the 50 EMA, which, you know, sits right at $93,000, breaking back below that, we stay within the cloud, of course, very slightly different, and then moved on to, in breaking below $40,000, $91,000, we went on to retest the leading span B. Now, in this scenario here, this level of, I guess, support at 39,000, ranging down to 38,000, that was the closest available level of support, right? So sure, it went on to retest the leading span B, but it also went on to retest the next closest available level of horizontal support. If I pull up my chart over here, we can see that's this high over here in the prior price action. So whether or not this translates to a complete breakdown, that's about 7%, all the way to the leading span B, or whether or not Bitcoin simply goes on to retrace the next available level of support is still in question, right? Like I said at the beginning of this video, the Ichimoku cloud isn't the only thing that's valid on a chart. We have horizontal levels, we have, I guess, volume gaps, we have momentum, we have other indicators that all suggest possible scenarios for future price action. But what this fractal does tell us, even if it isn't confirming an entire move all the way down to $85,000, it's telling us that until we break above this midline level of resistance and sustain that as a base of support to shift the price action back above $100,000, and retesting the range high, we cannot expect, you know, that, I guess, sustained bullish move. So essentially what we need to see is it's confirming $95,000 as our most crucial level of resistance right now, which should facilitate a move to 99, sorry, and then a move to the range high. Why is my chart being like this? One last thing that we can see as well that acts as a bullish validation for that move, if we take a look at the conversion line and baseline, is we can see them crossing. So the conversion line is a shorter time frame sort of moving average trend line, and then the baseline is a higher time frame version of that. They're very similar. And they're calculated in a little bit of a convoluted way, and I don't always remember it. I'm pretty sure it's like the midline of the highs and lows of the last 26 periods or something like that. But what a cross of the conversion line and baseline usually tells us is that we're seeing a bullish shift in short time frame momentum that has been enough to push us above that prior sort of trend line, or that higher time frame trend line that we're seeing exhibited by the baseline, the red line. So what we need to see then in this year, if we apply that analysis, is not only should we be seeing a cross of 95K and 99K to facilitate a move to 100, but we will also want to see that blue squiggly line, our conversion line, crossing back above the baseline as well. And so until we see those things, the probabilities are in favor of a continued bearish move. First of all, the loss of 81K, and then a retest of this level over here, right, which is actually the base of that liquidity zone. If we pull up the Smart Money Concepts indicator at $88,000, 87K being this next blue line, and 85,000 being, of course, sell side liquidity. Now, $87,000 is actually quite important because if we take a look at the daily chart, we can see 87K is actually where the volume gap, or this really huge dip in the VIPV, begins here on the daily chart. So that's going to act as a really important level of support, because falling below it, we enter the gap and are likely to see an extended bearish move. So it's going to act as a validation point for, a significant level of interest, and therefore buying pressure. Now, before I wrap up the video, I do really quickly want to touch on the short time frame price action. So we're on a 30-minute chart here, and we can see a developing structure that potentially suggests, what that breakdown of 91,000 is going to look like, being this ascending channel. So an ascending channel is a generally bearish structure, and we can see we've entered it into from a little bit of a downtrend over here. So we are more likely or not going to see a downtrending continuation in the breakdown of that structure, right? And the measured move is the height of the channel, and that takes us to just below $90,000, essentially resulting in a breakdown of that very crucial level of support. We can also see an RSI uptrend as well that maps out this ascending channel, as well as the bullish divergence leading to this rally and retest of 95K. And that's probably going to be the first thing to be looking out for in terms of that breakdown. So we'll see a leading momentum shift downwards, followed by a potential breakdown of our uptrend here, and then a move into this range of support. What we can also see, though, is that this structure on our upper trend line sits above our crucial resistance right now at $95,000. So potentially, if Bitcoin continues to hold this RSI uptrend and we see a bounce from this base of uptrending support here, our dynamic support on the short time frame, we might see a move up to retest that trend line, and in holding above $95,000 and flipping it as a base of support, we could potentially facilitate an invalidation of this bearish structure and a move up to retest $99,000. So really interesting sort of chart play out over here, and I'm very interested to see how it sort of happens. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnext to get 15% off all of your trading fees. I'll catch you guys in the next one. Bye!